No one
Well,
under
that's
the age of
the 70s.
no one under the age of
We're
45
talking about your
watches.
TikTok challenges that you've been putting on there. So that's how we're going to get them back. Is like they're going to go, well, what TikTok challenges? I want to see David Maris. What's he doing? Is he flossing? What is he doing?
I battle Charlie D'Amelio often with TikTok dances.
Oh yeah.
I like TikTok. I enjoy
Hey,
it.
Jen, you let us know when we can roll, okay?
Yeah, I'm just waiting for a few more people to show up. Keep talking.
Oh,
keep
anyone you
chatting.
know?
Say hi to
Anyone
your
you know?
people.
My mom, no, I'm kidding. I just told my cousins to join in.
I heard that Elon Musk was going to make an appearance today.
That's right. That's right. By video. By YouTube link.
It's Robotaxi Day.
I know. It's like, how many of these things where you hear about stuff? Although tomorrow on our podcast, one of my friends was the 12th employee at Tesla, director of engineering. Now he's doing flying cars. So I'm super excited to interview him. He's going to be fun.
Flying cars. I can't imagine a better idea.
Is he at Gobi or something?
He's at, yeah, Joby. Yeah.
Okay, yeah. I actually have some questions for you for him then.
Send me your questions. That'd be great.
Because other than emergency use, I think it will not get off the ground.
Well, that's the fun of this, is we can ask very practical questions to like a very honest, good guy who's thoughtful and from an engineering standpoint too. So I think it'll be fun.
Just like Wall Street Beats.
Good tie-in. Good tie-in.
Like do shuttle flights from like Newark to JFK, stuff like that. Like really
I
short.
think that they're saying that, and rich people. I think the Olympics is going to be one usage of that in a few years. I don't know. We'll see what he says, right? But I'm going to get a little bit into the competitive landscape. There's so many of them out there. Obviously, China's made some progress on it, but I don't think that people
Elon, their amusement ride.
tuning in to hear about flying cars. But if you are, I'll let you know when that's coming out.
You know what happens, by the way, if you bump into, you're in a taxi and you bump into another taxi? Nothing. You know what happens in the air?
We can come up with a lot of stuff. So I'm just curious. I'm trying to keep an open mind, right? Keep an open mind, find out what he has to say.
It's actually a very interesting physics question. So, an energy question. The amount to lift something off the ground, the amount of energy is exponential relative to pushing something forward. So,
like a car.
Moving a car forward is really easy. If you put a car in neutral, a 12-year-old can push it down the road.
I get it. But that's why you have somebody on, just get the other side. Like, what are we missing here? Are we missing anything? What are they working on? So, listen, I think we roll. It is 7:04. We have Charlie back. David looks caffeinated. It is Thursday, October 10th. We're here at Wall Street Beats. We've got Charlie, no shirt is too fun, Peabody, going to talk about financials, although you're not really showing it today, Charlie.
No, I'm not.
Maris of Lifetime Fun, and Russell, push-up challenger Young, reporting on Applied Digital today. And Kevin, it's hot in the kitchen baker. That's the crew that we've got. I'm Nadine Turman. I'm going to kick it off with Charlie. Obviously, you're going to be talking about financials, but some of the data probably could have came out today. So what's your take on that, Charlie?
Yeah, so tomorrow the big banks kick off earnings season with JP Morgan and Wells Fargo before the opening. Let me start with JP Morgan and what the expectations are. I'm looking for JP Morgan to beat consensus earnings of $4. I'm at $4.35 for the quarter. I don't think the reported earnings are going to be what moves the stocks tomorrow morning. I think it's really going to be what Jamie Dimon says about the environment in the future. But just a few comments on JP Morgan and how the stock might react. If they do beat, as I expect them to, the stock could trade up to 220, 225. That wouldn't shock me. But I think there's limited upside on JP Morgan shares for two reasons. Jamie Dimon is going to tell you that net interest income or top line revenue growth is probably going to decline next year, and that they're going to continue to spend in investing in the franchise. So operating expenses are going to be up next year. So NII drops to 89 billion from 91 billion. operating expenses grow from 92 billion to 94, 95 billion next year. And so that puts a lot of pressure on fee income to create total revenue growth. And fee income is highly dependent on capital markets, which are very hard to forecast. So I don't think anyone's going to chase this stock tomorrow if Jamie Dimon, gives cautious, optimistic, outlook on the environment. So that's the first one. But they do set the tone for the rest of the banks.
Right.
The second one is Wells Fargo. This one I actually would buy ahead of the earnings tomorrow. I'm consensus. I think they can earn $1.28, which is a decent quarter. But you've had a lot of negative expectations coming into the quarter on Wells Fargo.
Right.
Their stress capital buffer caused their capital requirements to go up in July. They had the anti-money laundering scandal, which caused people to worry about whether the asset cap was going to be removed. And then they've been guiding down on net interest income through the balance of this calendar year. So all those negatives were built into the third quarter, where Wells Fargo is one of the worst performers during the third quarter.
Right.
I think
Is this still the news type of thing where maybe are they going to outperform because of the numbers, because of guidance? What do you think makes the stock price go up here? What is it that's the driver?
I think there are two catalysts that I can highlight. One is that they've submitted the plan to have the asset cap removed. That plan is going to get reviewed over a 90-day period, and then the Fed will start to rule on that probability. I think there's a good chance by the first half of 25 that the asset cap is removed, and that would be significant because then they can grow their card portfolio more robustly. They can add a lot of investment banking products that require balance sheet expansion. But the second thing is they have been fairly adamant about NII declining all year long, but bottoming towards the end of this year. If I look at the consensus forecast for next year, there's still forecasts of NII dropping in the first half of next year. And if they come out tomorrow and say, we think we've seen the bottom in NII, that would be another positive catalyst. That NII starts to grow more quickly sooner than others have expected.
So can you compare what JP Morgan would say if NII is going to go down next year? Why would Wells Fargo's improve versus theirs worsen?
It really relates to portfolio mix, but JP Morgan has been very short dated in their investment portfolio. So they're not getting much of a pickup on reinvestments in investments. Wells Fargo has been a little longer term, so they've got securities that are repricing higher. Then it is also a function of the loan mix, is a function of the ability to use swaps. JP Morgan just is too big to use interest rate swaps, and that's why the marketplace is much more optimistic on regional banks because the regional banks have used interest rate swaps to lock in current rates on the theory that rates are going to decline in 2025. JP Morgan can't really do that. They have to, go with the natural environment. But yeah, there's one bank, that reports next Tuesday that I think is way overvalued, and that's PNC. It is a high quality regional bank. They've been very optimistic about what their NII is going to do in 25. They're talking about record NII in 25. But it's really priced in. And I think that's going to, that one on Tuesday, they report before the opening on Tuesday, is a sell the news type of name, PNC.
And I know that you've talked a little bit about shorting regionals, shorting Goldman. Is this the time to do it, or are we still waiting on that?
I am short Goldman. I think they're going to have a disappointing quarter. I think the optimism around, capital markets is still too far advanced, I guess is the way to put it. I mean, everyone is expecting this big rebound in investment banking, and we have had a rebound. I'm not saying we haven't had a rebound, but I just think the environment is going to continue to push out the strength of that rebound, I guess is the way to put it.
So can you go short into the quarter like you are, or is it one of those things that maybe you wait through some of the earnings season and then go short? Or how, if someone doesn't have a position, how do they play it in terms of timing?
I'm going short into the quarter on the theory that it is going to be a disappointing number. I'm down around $7.30. I think the street's around $8. Now, I have to be careful because the company did in September preview a number of the things that would lead you to believe it's going to be a disappointing quarter. And so the question is the marketplace willing to look through the short-term weakness on the concept, and I want to emphasize concept, that 25 is going to be a better year? We're in that funny period of the calendar where you can't disprove anything that you want to believe in 25. And as long as there's enough liquidity floating around here, you can assume whatever you want about the capital markets in 25. But I think 25 is not going to be the robust year that people expect.
Right. Well, thank you. Now we're going to switch it over to David. David, lifetime of fun here. What is your update?
Yeah, so I've owned Lifetime for a while, earlier this year, so not that long, but the stock's done really well. And when stocks do that, I always try to look to see, should I be selling this or not? The trends every quarter that they've reported have been really solid. They've been opening new centers and doing lease backs to kind of lower their financial exposure to some of the real estate. It's just been a really good story, executing really well. And this last quarter, they reported 26 cents, which was well above the 15-cent consensus number. Now we're at 19 cents for the consensus number for the third quarter. I think they're going to beat it. I think they're going to beat it pretty handily. Web traffic is up 10% sequentially, even a little bit more than that. There were a couple spikes. But if we take those spikes out, just sequentially, it's up 10%. It's up 50% year over year. There's a slight dilution from they did an offering during the quarter, but some of that was a selling shareholder, but so about 3%. So that might be a little bit of a headwind. But again, I think that this year for 2025, current consensus is $1. I think they do $1.25. Wow. So I'm going to keep the position, but I just wanted to let you know my thinking, which is now they have to execute. Before, I think it was just undervalued. People didn't understand the earnings power and that the multiple would expand as people got to know the story. I think now they know it. The company has to now put up better than expected numbers, which is always a tougher thing to do when you're going up against. But I don't think the street's caught up yet. I think that they're still so think about this. If they did 20 cents last quarter and consensus is only $1 for next year, and they were growing so fast the last quarter, $1 doesn't make a lot of sense, right? That's so. Again, I think $1.25 might be a little bit of a stretch, but I don't think it's that much of a stretch. And so then you ask yourself, well, what do I put on that? If I only put a 20 multiple, then you're at a fair value now. But I think it's growing this fast. You should have a 25 multiple, which gives you more upside. But let's see how this quarter is. So they report on the 24th, so something I'm keeping an eye on.
Okay, so you have a couple more weeks going into the quarter long. We'll see what happens then, but we're getting potentially to a reasonably valued level such that you might need to tightly manage that position. Good job on the winner there, and thanks for the update.
Thanks.
Now I'm going to turn over to Russell in tech. I know you're going to talk to us a little bit about Applied Digital today. What are you thinking about that name?
Hi. Hey, good morning, Nadine. First, I wanted to call out the OpenAI funding round that put a big valuation on it. And there's lots of stories going around about the forecast for the business, where the forecast is that they're going to lose $14 billion in 26, but then revenues will be $100 billion in 29. And there's lots of stories out there saying, oh, this is ridiculous. Are we back to SPAC projections? But it's, Microsoft is backing this. And so the estimates out here are really kind of big. And it's interesting to think about what the implications will be if these numbers are really true. And that goes on with what I've been saying about data center demand and falls right into Applied Digital, which reported last night. The quarter was a beat quarter in terms of revenues and EBITDA, but that really wasn't the big story. Everyone's waiting to hear them sign a lease with a hyperscaler. And so that's still in progress. And they said they're days to weeks away. And so it could be 4 days, it could be 8 weeks, but regardless, it's going to happen. They're highly confident. What makes this very interesting is all the Wall Street firms want to wait for this deal to be signed before they adjust their numbers. So everyone's numbers are way too low. And when the contract is signed, it's going to be a massive reset to the valuation. The first 400 megawatts of data center, analysts are estimating, will be $400 million in net operating income. So the numbers get really crazy. When you look at North Dakota, Microsoft has made a lot of statements about how active they want to be in North Dakota. There's lots of solar, there's lots of wind. The location's great for them. And so it's just waiting for this contract to be signed. And everyone has their eyes all over it, but they're doing all the right things, and I'm sticking with the stock.
So, but Russell, talk to me, why would a company come out and say it's going to be signed? Like, what do they have to benefit, especially if there's anything left to negotiation, right? Like, why would you do that? Why did they come out?
Well, this is a huge part of the business model. And so they've been talking about this for months, if not years, about what the business model is going to be, right? And so they've just been negotiations to sign it. It's like if you had a beach house, you said, yeah, I'm going to rent it out this summer. Is your contract signed? Well, it's going to be signed before the summer comes, but it just takes a while to negotiate these terms. And who knows, maybe Microsoft is waiting until they report to announce the deal. And so it might not be Applied Digital's to announce. The very fact they've used the banks and they've lined up funding, to me, suggests that this deal is essentially done.
Okay. All right. That's helpful. Maybe someone else is controlling the narrative and has that in the contract. So that's helpful. And now let's go back to Kevin. Kevin, I know you've got always lots of good charts for us, and you're seeing on the technical side of the market and positions. What are you looking at today that's interesting?
I'm looking at McKesson, and the reason I'm looking at McKesson is that it's a result of a screen of companies that have the highest percentage of their revenues from the U.S. federal government. And this was spawned by a podcast appearance of Elon Musk on the All In podcast this past week. Trump was on the All In podcast 2-3 months ago and was talking about this in more vague terms, but Musk said that the government is the DMV at scale. And of course, it gets a chuckle from the crowd. I also think it's true. And the amount of fat, waste, and corruption that's in the government, I think, is substantial. And this isn't being political. This is being an investor saying, I don't see anybody talking about November 6th or January 22nd, whenever the date is, saying that there could be meaningful cuts for the first time in U.S. federal government spending. And so what I want to do is have a list together like McKesson that, let's put the McKesson chart up here, please, Jen. Thank you. And so they make a joke of this. This is the Department of Government Efficiency. And again, that gets a chuckle from the crowd. Expenses $1 trillion. We spend too much money. There's way too much, waste and fraud. And I'm not saying McKesson's, doing that, but they're just the recipient of the U.S. government. And I'll guarantee you that if they do an audit, like Musk has suggested, that he audit every single department and justify what they do and how many people they do it with, similar to what he did at Twitter, frankly, and meaningfully cut that $1 trillion of interest expense down. So I put these red arrows here because it's just as a bonus. This is my cell discipline in microcosm. I've gone back and I've studied all this, not all, hundreds of companies that have rolled over and generated significant losses. And this is what they look like. They close below the 200-day moving average. I would sell a third on this first arrow. The 50-day crosses down through the 200, sell a second third. You never catch the top, but you avoid the 60% swoon that occurs when these things roll over. So I'm looking for the defense companies, obviously have a huge percentage of the federal government. The fact that Palantir hits new highs, it seems like every day, maybe they're part of the solution. Maybe they're overvalued, but maybe they are going to be a recipient of the blessings of the Department of Government Efficiency. So this is a very low probability, but it's also being ignored by the street and ignored by the media. And what I want to do is have all of our everybody on the Wall Street Beats teams and all our subscribers not be sideswiped if this occurs in the next 3-4 months, and be ready for I think, some significant changes in major stock groups going forward.
So Kevin, I'm going to push you on this just to have a better understanding, not because I'm challenging, pro or con of what you're saying, but is this a headline risk? Because it's really hard, I think, for people to win and then start saying they're going to make cuts, which then hits employees and hits, the people who voted for them. And so how do you get a sense of timing of this? How do you get a sense of, or would both sides do this? Are you saying, is this like a Republican trade? So not to be political, but just really trying to understand, if someone wants to do this, and are you shorting these names now? Or is it just that if you're long, you're looking to lighten up on the names? So just trying to clarify what the trade is and the drivers behind it.
Yeah, no, I think this is very low probability, but I think that it is being largely ignored by the street and by the media. And so if it happens, I think McKesson's going to have another leg to the downside. The defense contractors have overcharged for years, and you can see all these groups that are, and I right now, full disclosure, because it's such low probability, but I want to be ready that if the Department of Education goes away and a company is getting a large piece of revenue from the Department of Education, I'd like to know that before the election and before they take office in January, before they say, we're going to use zero-based budgeting from now on, and XYZ stock, I don't have one in the Department of Education example, but the defense contractors could roll over pretty meaningfully. And again, the K Street is very effective on both the Republican and the Democratic side. I understand how far-fetched this might sound, but I keep having this occur from different sources, and the interest expense charts that I've shared in the past give political cover for this. We spend too much money, we waste too much money, and something has to give, and it won't be Social Security. So it might be the Department of Education, as an example. It might be defense budgets. So I'm going to I go through every chart in the ETF world every single month, and I don't see the defense companies rolling over yet. But if they do, going into November, December, I'm going to pay attention. I'm going to have this in my quiver to use as a weapon. Right now, I'm not doing anything with these trades, but I want everybody to put their list together of stocks that can go up or down if the government goes on Ozempic.
Okay. All right. Thank you, Kevin. Well, that's it for us today on Thursday, October 10th. We'll catch you back tomorrow on Friday, which are going to go deep into a few topics. And so definitely check that out. Thank you.
Thanks.
Thanks.